Gold drops below $2,600 before staking a V-shaped rebound, surging over 3% so far this week. Why have bulls suddenly entered the market, and how much more upside potential could we see? All this and more in this week's As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. Gold has made a sharp V-shaped recovery over the past week, with bulls taking back control. In the short term, the escalation of the geopolitical conflict has fueled buying momentum, while over the longer term, factors like US real yields and central bank gold purchases are set to keep supporting prices. This week, a handful of US economic data releases could spark some price swings, so traders will want to stay alert. In today's video, we'll cover the technical outlook, the key drivers behind gold's recent moves, and most importantly, where prices might be headed next. Let's dive in. Looking at the gold against US dollar daily chart, the rebound is clear after hitting a bottom. Last week, gold broke below $2,600, slipping to around $2,532, right near the August highs. This level also lines up with the 61.8% Fibonacci retracement level of the recent uptrend and the 100-day moving average, which provided solid support. But on Monday, bulls came roaring back, reclaiming $2,600 and pushing prices above the 5-day EMA. As of this morning, gold is up over 3% this week. If the rally continues, the next major hurdle will be the late September high at $2,690, which also aligns with the 23.6% Fibonacci retracement. While on the flip side, if prices pull back, how they react around $2,600 and the 100-day moving average will be quite crucial. That said, not everyone's convinced that this rebound has legs. After a 9% drop, many traders are quite skeptical about whether safe haven buying sparked by geopolitical tensions can keep the rally going. Meanwhile, stronger than expected US inflation and retail sales data in October, paired with the lowest initial jobless claims in 6 months, have dampened expectations for a December Fed rate cut, which hasn't helped gold's case. I think these kind of doubts are fair, but even putting geopolitics aside, gold still has room to run. Because 3 big drivers, real yields, central bank buying, and potential moves in yuan, are all pointing in gold's favor. Actually, let's start with the real yield. Thanks to the Trump trade, 10-year US Treasury real yields have climbed from September's low of 2.02% to 2.34% at the moment, which has boosted the dollar and weighed on gold. But will real yields stay high? Well, I think they are more likely to go lower, actually. While Trump's presidency would stoke US inflation, the Fed doesn't really seem keen on rate hikes. At most, they might slow the pace of cuts. Also, a low-rate environment is critical for managing US debt issues, and with GDP growth unlikely to stay near 3%, I believe real yields will eventually come back down. Then there's central bank gold purchases. While I mentioned in last week's video that the demand, including from the PBOC, has slowed down, the future really depends on whether de-dollarization picks up steam, and I think it will. Trump's aggressive fiscal policies and rising debt issues could undermine the dollar's credibility, while his protectionist stance might push more central banks to boost their gold reserves, giving gold prices a lift. And finally, US-China relations are another wild card the market hasn't really fully priced in. A weaker yuan or heightened safe haven demand could provide additional tailwinds for gold. So overall, even with short-term volatility, the fundamentals, real yield, central bank gold buying, and geopolitical risk still favor the bulls. I think any small pullbacks could be seen as buying opportunities. As for this week, the calendar's relatively quiet, but traders are watching for Philly Fed data to see if it mirrors the surge seen in New York State. Also, keep an eye on S&P Global's PMIs and the University of Michigan's Consumer Sentiment Index. If this report shows the U.S. economy holding up well, gold might face some pressure as December rate cutbacks fade, but I believe any downside should be quite limited. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!